All right, so Aaron's already talked about some of these key things that are driving volatility because volatility is the name of every market, whether it be agricultural commodities, energies, uh, you name it. And I mean, I don't if it's being traded. Actually, you can probably go look at a lot of your retirement funds and see how they've dropped the past couple of weeks, if you really want to, and how your investments have played out. And as we started earlier, before we got started, mentioning to Aaron that diversification is our friend, and I think there's no truer time than right now that's a true statement. But we'll go through kind of what we've been looking at, because cattle markets have been really good, uh, been really kind to us. Really, a lot of strength being shown in cattle markets, and with the news of the Russian Ukraine crisis, or whatever name they put on it, we have seen a lot of volatility in futures markets, um, and those paper traded markets, but we have not seen that same volatility in our local auction barns and in our uh, fat cattle trade. Not the same type of volatility. So the actual cash markets have been allowing the uh, futures markets to play to their own tune right now without doing a whole lot of following. Um, we continue to see some areas where drought is really hurting heifer retention. That bodes well for people with cattle right now that are putting calves on the ground, because that just really supports prices moving forward. There's still some opportunities out there for people buying cattle and reselling those at heavier weights. And the international market, for as far as beef demand is concerned, is very, very strong. It's just the other international issues that we have to be keeping our eye on, because they're going to influence everything that's going on. Aaron's talking about corn prices, wheat prices. I mean, our feed grain prices have a lot of volatility, but they've also shot up a lot higher, and we know that that's going to put pressure on feeder cattle uh, prices, um, to some degree. So let's just look where we are with slaughter cattle prices. I mean, we're looking at some of the highest prices we've seen since the really, really strong run in prices in 14 and 15. Uh, wouldn't surprise me. I mean, I think I've made a comment a time or two. There's a chance that we could get up to a $1.50 this spring on these fat cattle. Is it going to be hard to get there? Yeah, it's going to be really difficult. But it's not out of reason. Um, and to think about where we peaked back in 2014 and 15 was around a little over $1.70 or so. Uh, you know, Being $20 off of that in today's time is not too far. It's not a far cry from $1.70. We're not going to see. I don't think we're going to see $1.70 anytime soon. Um, but we're really having really, really strong finished cattle prices, which is good for the feedlot, which feeds down to the eventually to the cow calf producer, the whole conglomerate of it. And I want to point out something that's really adding value to these animals compared to the past several years. If you look at the 5-year average, $10 per hundredweight is what the steer hide and offal value was. I mean, that value today is adding a full $4 to the prices I just showed. So if we back up and we look at the fact that we traded around 143 last week, if you made hide and offal values, if you back them off to the 5-year average that we had been seeing, we would be having fat cattle trade at 138, 139 instead of 143. That is a huge difference. And so a lot of strong, and a lot of this, the thing is these products typically are driven by the international market, because most of these things are exported. And so we're starting to see a bigger pull on hides and offal items. And, a 40% increase in price compared to a year ago is not a bad thing. And you can see in 2021 how those prices had run up and, got up to over $16. And we'll probably see that again at some point this year. Bringing it just a touch closer to home and looking at our weekly averages, we've got cattle, these 5 and 6 weight, 550-pound calves trading above $1.70. I've been saying it since last fall that these animals could get up to $1.80. We still have March and April when prices are really, really strong for these lightweight calves as grass comes on. We're going to see some of the nicest weather we've seen right here this week, and if you go and look at those weekly auctions that we have had this week, Monday and Tuesday, and of course we'll have some Wednesday sales today. Prices are still really, really strong. I'm sure the Russia deal, Ukraine deal has tempered it some and made people pull off of their very, very bullishness. But we can definitely see these prices hit 180. That might be good for those selling. It might not be as good for those buying. But we're definitely a little over 170 on those animals right now, and that's as good as it's been in a long, long time. And I think a lot of producers in our state and around the Southeast and across the country are pretty excited to see some of these prices. The feeder cattle price is good. It's good. I'm not going to say it's bad. The futures market has us being a lot stronger than what it really is. But I'm talking about as we look out into May, August, September, October time period. But we do still have potential. If corn prices don't go to $8 and demand remains strong, and I see no reason for demand to soften for beef, I think we're going to see, we probably can see, $20 more in this market right here or more. So we'll just play that by ear. I'm going to be interested to see how cattle sell Friday at the Lower Middle Tennessee Cattlemen's Association meeting. I'm very curious to see how some of those loads sell, just to be able to compare it back to a couple of months, because prices will be tempered a little bit, just because of the volatility in the market and the uncertainties in politics. But overall, I think prices will still be fairly strong as these cattle feeders have appetites for cattle, and as they know that there's going to be a gap. There's probably going to be a hole where we need cattle to be filling in, so they're going to be hungry to get some of those cattle. The slaughter cow market's still running strong. Of course, that feeds the ground beef business. Just a very, very strong market. That market's been strong since this time a year ago. Be hard not to go ahead and get rid of those poor producing animals and just moving them out the door, especially considering Aaron was talking about fertilizer prices, input prices, and I have a feeling there's going to be people that cut back on fertilizing pasture and hay ground. And when I say cut back, I'm not saying that they won't fertilize at all, but I do think that they're going to cut back on how much they fertilize and or the quantity of application. And in doing that, that's going to reduce forage production to some degree. So this might be a year to reduce the stocking rate just a little bit, to conserve on some of those inputs. But at the same time, it might give you the opportunity to grow the calves that you do produce a little larger, because they're not having to compete as much for those forage resources, and you can still get a really, really strong value in that cull market. Because 70 cents, if you're just saying 70 cents times a 1,200 pounder, that's $840 for that animal, and that's a pretty good salvage value for her, considering that when a lot of those animals entered the herd, those same heifers at 500 pounds were probably worth only $600, if they entered the herd in 2016 or 17, and they just turned out to be poor producers. so far slaughter has been pretty much on par with what we would expect. Beef cows continue to be run through the marketplace, and again, that's largely because of these drought situations that we have. The whole western half of the United States, well, I shouldn't say half, the western part going across the Mississippi, large portion of the country still in terrible drought conditions, and producers just physically cannot hold on to animals because feed prices are too high, hay prices are too high, and they don't have anything to put in them. I mean, some of them, I was talking with some folks in North Dakota, and there's a lot of the feedlots that turned into our backgrounding operations in that part of the country this past year that turned into uh, cow havens. I'll call them. People sending their cows to these feedlots, and feedlot operators just managing cows to keep feed in front of them. So with the hope of the producer being able to take those back when the drought was broke. And so those things are happening, and we've got to remember that it's not always we've got to sell, but it can get kind of expensive. Some of these alternative management practices. Meat production still very strong. Beef production up, broiler production up, pork production down. That's not unexpected. That's pretty much in line with what USDA expected. That's pretty much in line with, I think, what most industry watchers would have expected. We'll see how that plays out as we move on, but the demand for all these products is very, very strong. I will say, I'm not going to talk about imports. We had record exports for 2021 for beef. That's both in a quantity basis and a value basis. I actually had an email yesterday that was asking about this, and I think it's a gentleman that writes for. I don't know if he's a freelance writer. I don't really know what he is, but it doesn't matter. But anyway, he writes for a few things, and he was asking about these exports and some of the reports that have come out. And a lot of people said, well, it was kind of surprising that we had really, really high beef and veal exports in 2021. And the value, that extreme value, because the value of beef exports was up something like 38% compared to the prior year. Well, we had already seen in the back half of 2020 where China was really starting to pick up beef from the United States. And there was no indication that they would slow down. And so in 2021, we saw them just continue to buy beef, and they became the number 3 destination behind Japan and South Korea as an export destination. And we continue to increase our exports to South Korea because of our very, very favorable trade agreement with them, where our tariffs continue to decline. And so I didn't think it was nearly as surprising. I mean, maybe the total value, but the fact that we set records, and the value standpoint record was even less of a surprise to me, because we know what just the nominal value of beef was. That nominal price of beef was setting records in and of itself. And so when we have that consistently high beef price and we're moving product, we didn't even have to move near as much product as we did a year ago to set a new value record. But exports have been strong. There's no reason to think that in 2022 that they would slow down. Beef exports should be very, very strong in 2022. Got an email this week on box beef cutouts, and that particular email reminded me that sometimes we forget what this value actually is. So I'm going to share that. The box beef cutout value, we don't actually trade beef as boxed beef cut. It's not a whole carcass thing, but this cutout value represents that whole carcass. And so there's no beef that's traded at this price. This price is a composite price. And I think there's a lot of y'all that already know this, but I think it's a good reminder because what they do, the way this is calculated, is USDA determines what percentage of the carcass is each cut that comes from a beef carcass. And so every cut, individual cut that comes from a carcass, they assign a percentage to that cut as to how much of the carcass it makes up. And they adjust those percentages now and again as seasonally as things change seasonally, and as packers and retailers change the products that that are being demanded. But you don't typically see major changes. And then they use the actual prices that each of those cuts sell for, and they use a weighted average here to come up with this box beef cutout value. And so what it does is it gives us the purpose of this value so we can kind of compare it to what finished cattle prices are bringing and see what the value of an animal is in the beef versus standing there on the hoof or just hanging on the rail. So we have a better idea of what that value added point is from an animal hanging on the rail or on the hoof to, at least being cut up and ready to be shipped somewhere. Prices are really, really strong. I'm not going to say that we will or won't go above 350 in 2022. I think there is strong support though at 250. When I started this job 10 years ago, it was hard for choice box beef to push past $200. That was a real struggle, and we finally broke through that. And then it kind of became like $200 was the price floor. And as you see, if you look at that 5-year average, well, my goodness, it never goes below $200 in that 5-year average. And we never went below $200 last year. And once we broke above 250 consistently, we hadn't been below 250. So is that going to be the new floor for box beef, for choice box beef? I don't know, but it sure appears like that way at this time. If it breaks down to 240, well, great. I mean, yeah, so you can't say that 250 is the floor, but it sure does seem like a really strong support price for box beef. So this is what I was talking about from the standpoint of drought. A lot of our state has had plenty of moisture. We've had abundant moisture, and I've come to the conclusion that I'll never wish away moisture, because when we had those dry years, well, when we were doing drought meetings in 2012, I mean, it was terribly dry. And I can remember back in, was it 2007 when we had drought? And anytime we get a little dry, I'd much rather have too much rain to not enough moisture. We have a large part of cattle country suffering from severe drought. And if you look there just in the center of all that, look at the Texas Panhandle, Oklahoma Panhandle, western half of Oklahoma. That is wheat country. And this time of year, most cattle would be coming off of wheat this time of year. A lot of those places had to move cattle early because they've had drought that has been persistent for a long time. So that's where I'm saying, we're probably going to have a hole somewhere of these cattle that would be going on feed this particular time of year. And we can look at January placements and say, oh, well, placements were down compared to the previous year. Well, yeah, but those animals had to go somewhere, and they might have gone into backgrounding yards. But I don't see how they could have stayed on wheat pasture, because wheat pasture would have been very, very short. And actually, some of the reports that I got from out there is, yeah, there's still a lot of cattle on pasture, but I don't know what they're grazing. So there was literally nothing there, and I've been there myself. I've had to do the same thing: overgraze, and they're just not going to perform. So they were probably being fed something else, and so they probably were putting on some more weight than what they might have typically been thought. So those animals are going to come off feed a little quicker. Omaha corn prices. Aaron's already talked about corn prices, but this is leading to really, really high cost of gain in the feedlot. Hay prices are very regional, but hay prices are very strong because of that severe drought out west. We will see corn prices put pressure on feeder cattle prices if they continue to escalate. They have to. I mean, there's only two inputs primarily for that feedlot. That's the cost of that animal. That's buying that animal and the cost of that feed. And we know that that corn is the basis of determining that feed price. And so we're going to continue to see pressure put on those feeder cattle prices. When I say pressure, that doesn't mean that prices are going to go down. That may just mean they don't go as high as what they could have gone. And that's an important aspect to remember as well. So when we do look at the feedlot standpoint, we see these cost of gains, and this is out of Kansas, but the cost of gains of those cattle coming off of feed in December was nearly $110. That's getting kind of pricey as far as feeding cattle. It also makes people that feed cattle, send cattle out to feed to own them in the feedlot. You start wondering a little bit, well, should I own them in the feedlot or should I just go ahead and move them, because it's going to be pretty expensive to feed them, and paying that monthly bill can get pretty stout on you, and especially when you have to wait an extra 5 or 6 months for your check. So let's just look at how this volatility has been playing out since Ukraine and Russia decided to have a physical altercation. That's what I'll call it, a physical altercation. We had, this from November 1st through middle of February, this market was just up. Good strength in this market. And then Ukraine and Russia hit, and we lose $10 in a matter of a week. And now we sit here and we're, where do we go from here? Well, if you're looking for price risk management, I don't think now is the time. I think we will continue to see this volatility, and when the price goes back up, which I think it will, I'm thinking longer term, because those in the short term you can't do much to change anything. But this volatility will offer an opportunity. It will. And so just be patient and wait for it. This is the May market. This is the May futures. I'll show August real quickly. Again, $8, $9 loss right there. And this is with yesterday's close. The market hadn't even opened this morning. It'll open about the time we shut down, whereas Aaron's grain market's open a lot earlier than that. But fortunately, in the cattle industry, we just have to watch them from about 8:30 to 1:30, and we get to call it calf rope for a little while. But anyway, really, really strong market. Do I think this futures market for August will bounce back above $1.80? Yeah, there's no doubt in my mind. I feel certain it will. Do I think it'll revisit 185? Good chance it will. Could it go to 190? It might. It very well might. But either way, a lot of opportunity that will be presented. Just don't get hasty because the market's going down and say, I need to do something now, because you may start locking in a price that you don't like. Whereas on the flip side, when you look at what Aaron was showing, you've got a market that has really, really jumped higher, and it's a time to actually start looking to do something. But what we tend to do is when the markets go up, we don't do anything, and we tend to, our psychology tells us to, well, the prices are going to go higher. And then when prices go down, our psychology says, oh no, we're going to just do nothing. We're going to jump in the market now and say, hey, and then we that's a poor decision too. So be patient. Fed cattle prices are going to be strong. I'm not going to spend a whole lot of time there. Despite what the futures market is saying, I still have some optimism in my cattle price expectations. You can see them there. They look fairly favorable. No reason to think that they won't be strong. I just don't have anything to complain about. But I do want to briefly look at LRP versus puts right now, just very, very briefly. That is terrible. I wish I knew how to get that out of my way. Y'all probably can't see it, but I can, unfortunately. And it blocks part of what I'm showing you. Aaron, what is the top value? What is on the blue, in the blue and the far right-hand corner beside the date? What is that top value?
The only one we can see the 624, and it's 08/30/22 is the top right-hand corner that we see on the screen.
It's 624?
Yeah.
Okay. Okay. And that associates with a 178 price, 178.13 or something like that. Okay. I just can't see it because I got something in the way here and I don't know how I can move it right this second. But so essentially that's $6 right there, that 624 or whatever exactly it is, correlates to this 178 floor price for LRP. And I want to show you that, and I'm not saying go buy LRP today or buy a put option today. Like I said, let's be patient. But I can come down here and look at these August put options at 178. I hope y'all can see my cursor circling 178. And it cost $8 yesterday at the close. And so essentially these two markets are closing about the same time. The market's going to close at the end of August for the futures market. LRP is pricing in for the end of August. And so you can literally get a 178 floor with LRP for essentially $1.75 cheaper per hundredweight than you can buy a put option. Now, Aaron made mention that, he doesn't like holding put options through expiration. I agree with him. Me either, because you want to capture some value from them if you can. Whereas that's the struggle with LRP is you have to hold it through expiration. It's insurance. Once you buy it, it's bought. But that's why it's cheaper. And if you have producers, or if you are a producer that would prefer just to put in a price floor and not think another thing about it and go on about your business, this is where LRP is your friend. LRP is the product because it is much cheaper. And we can go through any of these. You can look at this 174 floor price, cost $490. Well, you come down here, 174 in the put option is going to cost you $6.23. So that's $1.25, $1.32 per hundredweight cheaper for a higher floor. And you actually get 13 more cents per hundredweight higher floor price. And so if you're looking at some things and you don't want to mess with all this volatility and you want to say, hey, I want to be able to at least know what my floor price is, these are some alternatives. And LRP can really help from the standpoint of those of you who don't, or those producers who don't want to actively manage risk all the time. So anyway, I don't want to belabor that. I just want to, throw that out there as that's a potential option. So I think things are really looking good. I really do continue to think we're going to have a good, strong bull market for the next 2 to 3 years. I think the Russia-Ukraine issue will simmer down a little bit. And I think our markets will bounce back regardless of what happens over there. Aaron really pointed out the major factors of some input prices that they're going to be influenced. Wheat prices are going to continue to be influenced because of the major production region and so forth.